Welcome to This Explainer. Look, the global crypto market has officially smashed past that $2 trillion mark for 2026. $2 trillion. It is absolutely massive, and it's moving faster than ever. If you're going to navigate this successfully, you literally can't just buy and hope anymore. That strategy is dead. Today, we're going to walk through a complete, holistic trifecta playbook custom-built for 2026. We're looking at how to maximize your wealth through an active offense, build compounding wealth through passive yield, and, absolutely crucial, how to protect the whole shebang with an unbreakable defense.
Okay, let's dive into this. On our agenda today, 1. The 2026 crypto landscape. 2. Short-term trading tactics. 3. Farming 2026 crypto airdrops. 4. Earning passive staking income. And 5. Avoiding sophisticated scams.
Section 1. The 2026 crypto landscape. Navigating a fragmented market.
Right now, we're navigating a highly fragmented market. While Bitcoin is hanging out around $70,000 as our macro anchor, institutional capital is aggressively rotating into real-world assets like Ondo and Injective. To capture those specific flows, you've got to explicitly choose your mindset. Short-term trading? That focuses entirely on price movement, volatility, and narrative momentum over days or weeks. It requires a high adrenaline, super reactive mindset. But contrast that with long-term investing, which requires deep patience. That's about zeroing in on fundamentals, network adoption, and compounding growth across market cycles. In 2026, you need to explicitly decide which hat you're wearing before you deploy a single dollar.
Section 2. Short-term trading tactics. The active offense. If you want to capitalize on market volatility in 2026, you just can't afford to be sluggish. You need high-speed execution. Let's break down these tactics, starting with the absolute most intense, scalping. This involves holding highly liquid positions for just seconds or minutes. Scalpers live on the 1 to 5 minute charts, trying to profit from tiny split-second price movements. To pull this off, you need assets with massive liquidity. Think Bitcoin, Ethereum, or heavily traded meme coins like Dog with Hat or Jupiter, where you can get in and out instantly without getting crushed by slippage.
Next up is day trading. The defining rule here is simple. Open and close your positions within a single day. You capture that daily volatility, but you get to sleep soundly at night because you avoid overnight market risks. This tactic is perfect for high-volume altcoins like Solana, especially when you're looking to catch quick, news-driven rallies while you're actually awake.
Now, if you can't be glued to a monitor all day, which, let's be honest, is most of us, there's swing trading. This means holding positions for several days up to a few weeks. The goal here is to capture larger market momentum and multi-day narrative trends. If an altcoin like Cardano starts showing a clear reversal pattern, a swing trader buys in and just rides that wave for a couple of weeks, totally ignoring the minute-by-minute noise. And rounding out our active offense tactics, we have arbitrage. Because the 2026 market is so fragmented across dozens of global exchanges, price inefficiencies happen literally all the time. Arbitrage traders exploit these differences. So, if an asset is priced at $26,000 on exchange A, but $26,050 on exchange B, they buy low and instantly sell high to lock in that quick, risk-averse profit.
Now, what's really interesting about this slide is that if you're applying those short-term tactics, you really need to target the hottest 2026 narratives. For instance, we've got SKAI riding that massive artificial intelligence wave, and Hype dominating the decentralized perpetual exchange narrative. Both of these offer high momentum, but they're definitely high risk. Then, looking at medium risk, you have TON, anchored by the Telegram ecosystem, and Morpho, capturing the DeFi lending revival. These present massive short-term opportunities, assuming you manage your risk tightly.
Section 3. Farming 2026 crypto airdrops. The hunt for free yield.
We're keeping up the active offense, but this time we're hunting for free yield. 2026 is shaping up to be an incredibly lucrative year for airdrops, and farming them safely requires a systematic approach. Step 1. You can execute very small, low-leverage trades on well-funded emerging decentralized exchanges, places like Gravity and EdgeX. You just keep the position open to accrue points. Step 2. Generate volume on prediction markets like Polymarket and Fufe. These platforms are seeing explosive volume right now, heavily driven by users participating in U.S. election catalysts and public figure events. Step 3. Simply earn XP by spending time and playing games on new, highly anticipated chains like Abstract. Distribute small amounts of capital across these platforms, and you really position yourself for significant token rewards.
So the crucial point is, What if you simply don't want to stare at charts all day? What if active trading and hopping around airdrops are just way too time-consuming for your lifestyle?
Section 4. Earning passive staking income. Building the yield pillar.
Proof-of-stake protocols allow your crypto to quite literally work for you in the background. You lock up your tokens to help secure the blockchain, and the network pays you steady rewards. And this brilliantly illustrates the sheer confidence in this system. 67.9%. That is the percentage of the entire Solana token supply currently staked and locked up in validators. That's a massive number. It shows you that long-term holders aren't out there day trading their bags. They're confidently locking them away to secure the network and earn compounding interest.
Let's look at the actual numbers here. Ethereum provides a highly secure, stable baseline yield of around 2.9%. But if you're looking for higher returns, networks with different inflationary tokenomics, like Solana, are offering around 7%. Meanwhile, Cosmos, or Atom, pushes all the way up to 17.5%. By diversifying across these networks, you can build a formidable passive income stream that absolutely crushes traditional bank savings rates.
But the real game changer in 2026 is liquid staking. Liquid staking tokens, or LSTs, solve that old annoying problem of having your funds locked up and unusable. LSTs let you earn those base staking rewards, but you get a receipt token in return. This means you maintain the ultimate flexibility to take that receipt token and deploy it across other decentralized finance protocols. Platforms like KuCoin Earn have made this incredibly easy for everyday users too, offering flexible redemptions and auto-compounding, so your capital efficiency is completely maximized.
Section 5. Avoiding sophisticated crypto scams, the fortress defense.
Okay, so we've built your offense and we've built your yield, but none of it matters if you lose it all, right? High yields inevitably attract highly sophisticated predators. I want this number to serve as a stark wake-up call for us. $17 billion. That is a staggering amount of global financial losses caused by cryptocurrency fraud and scams in 2025 alone. That's enough to rival the GDP of a small country. The threat is incredibly real, and honestly, if you think you're too smart to get scammed, you are precisely the target they're looking for.
The scams destroying portfolios right now are terrifyingly sophisticated. We're seeing a massive surge in AI-generated deepfakes of public figures like Elon Musk and Donald Trump promoting fake giveaways on live streams. Then there are fake pig butchering scams where fraudsters spend months building romantic trust before finally convincing victims to invest in fake platforms. We've seen devastating DeFi meme coin rug pulls, like the Meteora M3 token, where insiders artificially inflated the price and then drained $69 million straight from the public. Add to that malicious wallet drainers hiding in seemingly normal links and SIM-swapping attacks that bypass your two-factor authentication entirely. It is a minefield out there.
To survive this, you must adopt strict defense protocols. First off, beware of anything promising guaranteed, risk-free returns. They simply do not exist. Period. Ignore high-pressure tactics. Urgency is a scammer's best friend. Always demand verifiable documentation and team transparency. From a technical standpoint, you need to segment your assets. Keep your daily trading funds in a hot wallet, sure, but lock the bulk of your wealth in an offline, cold hardware wallet, and absolutely always verify URLs and use robust multi-factor authentication.
Let's move to and see how this builds into our core philosophy. All of these strategies lead us to one foundational rule of risk management. No legitimate investment is ever without risk. Whether you're scalping meme coins on a 1-minute chart, farming upcoming airdrops, or just parking your Ethereum in a staking protocol, risk is always present. Acknowledging that risk, that's the very first step in defending your wealth. Which leaves us with one final vital question. Are you prepared to execute your 2026 crypto playbook and, more importantly, defend it? The capital is out there, the yields are very real, but the landscape requires strict discipline, strategy, and ironclad security. Take a hard look at your risk tolerance today, refine your strategy, and let's make this cycle your most successful one yet. Thanks for joining me for this explainer, and happy learning!